Welcome to another section of AE accounting tutorials. Today we are ending our series on accounting for hire purchases. That is the last subtopic of this chapter, that is repossession. Is that okay? So today we are looking at the concept of repossession. So if you are new to this channel, I will encourage you to subscribe to this channel, turn on your notification bell so that any moment I upload any new video, you will get notified on your devices. We have so many things to learn on this channel. Is that okay? So before we take a question on repossession, I would like to introduce you to the basic concepts and the accounting arrangement with regards to repossession. When we talk of repossession, okay, this normally occurs when the buyer or the hire purchaser default installment payment. That is where the buyer fails to pay any of the installment payments, okay. When this happens, the hire vendor has the right to take over or repossess the item involved, okay. And this repossessed asset or item can be reconditioned by the hire vendor and be sold out. Is that okay? And the hire vendor will not refund any money back to the hire purchaser, okay. According to the law, those installment payments already made by the hire purchaser or the buyer will be considered as rental payments by the hire vendor, okay. And this is basically the concept behind repossession. Is that okay? In making the accounting arrangement for repossession, we have two basic methods that are used by the hire vendors. That is the stock on hire method and the provision for unrealized profit method. So we will be using one of the methods to solve a question on this topic. But remember that when we are making the accounting arrangement, values relating to the repossessed goods, okay, will be accounted for separately. That is, it will be accounted for in the repossession account. And values or transactions relating to items that are still under hire purchase contract will also be accounted for separately. That is in the hire purchase trading account, okay. So after looking at the basic concept behind repossession, let's take a look at the accounting arrangements of repossession. So let's look at the accounting arrangement of the repossession. Is that okay? So accounting arrangement. Accounting arrangement. All right. So the first accounting arrangement I would like to talk about is that hire purchase data is debited and the hire purchase sales is credited with the hire purchase selling price of the repossessed goods. That is the first accounting entry, okay, or accounting arrangement. So HP debtor is credited and HP sales is debited, okay, is debited with the hire purchase selling price of the repossessed goods. Of the repossessed goods. That is the first accounting arrangement, okay. So I would like to use two different accounts to explain this concept, okay. We know that in a hire purchase contract, okay, we have relevant account when it comes to the accounting arrangement for hire vendor. So we have the HP sales account, we have the HP debtors account. As far as repossession is concerned, we may have a repossession account as well. We know that when we sell an item on hire purchase contract, what we do is that we credit hire purchase sales and debit hire purchase data. So let's say the amount is 5,000. We credit hire purchase sales and debit the hire purchase data. So when repossession occurred, so let's say an amount of 2,000 has been repossessed. The accounting arrangement is that the hire purchase data is credited. That is, the hire purchase data account is credited and the high purchase sales account is debited with the selling price of the repossessed goods. So this is what we are talking about. We debit this by 2,000, we credit this by 2,000 to reduce the selling price because part of this selling price has been repossessed. Okay, so basically that is the meaning of the first accounting arrangement. The second accounting arrangement is that high purchase debtor is debited and repossession account is credited with all deposit and installment already received on the repossessed account. So HP debtor is debited and repossession account is credited with all deposit and installments already received on the repossessed goods. Okay, so what we are saying is that when repossession occurs and there is a deposit and installment that has been already received in relation to the repossessed goods, what we do is that we debit the high purchase debtor account and credit repossession account. We knew that when we make payments, when the high purchase debtor make deposit or installment, we credit the account of the high purchase debtor. So we have deposits and we have installment. Let's say 2,000, another 2,000. Let's say this is 3,000. Okay, let's say that the selling price of the item is 7,000. So we debit this in the name of sales. So when repossession occurs and there is a deposit and installment that has been received in relation to the repossession, we debit the high purchase debtor account and credit repossession account. We are debiting in order to reduce the deposit and installments. Okay, and it is an income to the high vendor. So we credit the repossession account. That is the meaning of this accounting arrangement. So the third accounting arrangement is that the cost of the high purchase goods is split into two. Okay, so the C, we talk of the cost of high purchase goods is split into two. This means that the cost of the high purchase goods, the portion that relates to the repossession account should be debited to repossession account. Is that okay? And a portion of the cost that relates to items that are still under high purchase contract should be debited to a high purchase trading account. Is that okay? The high purchase trading account and the repossession account, they all perform the same function. We prepare these two accounts to ascertain a gross profit. So the fourth accounting arrangement is that the sale of the repossessed goods is credited to repossession account. So sales of repossessed goods is credited to repossession account. Repossession account. Is that okay? So the proceed on the sales of the repossessed goods should be credited to repossession account, and the cost incurred or the cost to sell of the repossessed goods should be debited to the repossession account in order to determine the gross profit on the repossession. So these are some few accounting arrangements that we need to understand when it comes to repossession. So I would like us to take a full practice question and try to solve to enhance our understanding on repossession. But we will be using one of the method. So let's use provision for unrealized profit method to solve the repossession question. You can also try your hands on the same question with the stock on high, but let's use the provision for unrealized profits method. So let's go through the question together. The following figures are summary of sales on high purchase made by Obibini Motors Limited during its first year in business. All amounts are in thousands. Okay, so we have the goods sold on high purchase. We have cost of sales being 9,000 cedis, high purchase selling price 15,000 cedis, deposit and installment paid by buyers 11,000 cedis. The terms of the high purchase agreement applicable to all customers required a deposit of 33 1/3% of the high purchase price of the goods, followed by 10 equal monthly installments. Cars costing of 180,000 cedis and sold on high purchase for 300,000 cedis to Kohia Company were repossessed after a deposit of 100,000 and two monthly installments of 40,000 had been received. The cars were then reconditioned at a cost of 10,000 cedis and sold for 60,000 cedis. Required: prepare the appropriate ledger account to give effect to the above transaction. So to begin with the solution, remember that Obibini Motor Limited is the high vendor. Okay, so we are making the appropriate ledgers in the book of the high vendor, and the appropriate ledgers here is the high purchase sales account, the high purchase debtors account, the high purchase trading account, the repossession account, and probably the provision for unrealized profit, because we are using provision for unrealized profit. So let's open the appropriate ledgers and try to pass the entries. So to begin passing the entry, okay, we have the high purchase selling price of 15,000. So that is the selling price. So we credit the high purchase sales account and debit the high purchase data. So that is in the name of HP data, and the amount is 15,000. All amounts are in thousands. Okay, so let's remember. Okay, so then we debit the high purchase data in the name of HP sales of 15,000. Okay, so we are done with the double entry of the high purchase selling price. So now let's pass the entry for the deposit and installments. So the deposit and installment is an amount of 11,000 cedis. And from the question, the terms of the high purchase agreement applicable to all customers requires a deposit of 33 1/3% of the high purchase price of the goods. Okay, so 33 1/3% of the high purchase price. So that is 33 1/3%. Okay, so we need to convert this mixed fraction with percentage to a proper fraction, then we apply on the selling price. We know the selling price to be 15,000, and this will represent the deposit. So the 33 1/3%, 33 1/3% can be written as 33 1/3 all over 100. Okay, and this is, we can convert this to improper fraction, that is 100 over 3. That is, you multiply this by this, add it to this, all over 100. And this can also be written as 100 over 3 divided by this 100. Any number standing alone is over 1. So this can also be written as 100 over 3 multiplied by 1 over 100. We multiply this to get 100 divided by 300. So that is 1 over 3. So it means that 1/3 of this amount represents the deposit. So to find deposit is 1/3 of the high purchase selling price, and this gives us 5,000 cedis. Is that okay? So when we come, the total amount is 11,000. So if 5,000 represents the deposit, we subtract the deposit, the remaining 6,000 becomes the installment. Is that okay? So when the high purchase data make deposit and installment, we credit the high purchase data account to reduce the sales amount. So we have deposit of 5,000, we have installment of 6,000. And this corresponding entry will be in the bank account of the high vendor, and the bank account is not relevant over here. So we are done with passing the entry with regards to deposits and installments. So after passing the entry for the deposit and installment, let's read this portion of the question. Cars costing of 180,000 and sold on high purchase for 300,000 to Cohere Company were repossessed. Okay, after initial deposit of 100,000 and two monthly installments of 40,000. Okay, so out of this sales 15,000, an amount of 300 has been repossessed. 300,000 has been repossessed. So what do we do with the repossessed? We credit this high purchase debtor account in order to reduce the sales. Okay, then the corresponding entry is that we will be debiting the high purchase sales account in order to reduce the sales amount. The total sales amount is 15,000, and out of this 15,000, 300,000 has been repossessed. So we need to record at the opposite side to reduce the balance. So what we do is that we have HP debtor, is that okay, in the name of repossession, and the amount is 300,000. Then we come to the debit side of high purchase sales in the name of HP debtor. Sorry, this is a HP debtor account, so we have HP sales as the corresponding entry. So here will be HP debtor, and the amount is 300,000. This is due to the repossession. So we are done passing the double entry for the selling price of the repossessed goods. So let's still read a portion of the question. Okay, remember that they say 100,000, there is a deposit of 100,000 and two monthly installments of 40,000 has been received. Okay, because of the repossession, that is 140,000. The 100,000 and the 40,000 add up to become 140,000. Okay, this was a deposit and installment that has been already received in relation to the repossessed goods. So what we do to this is that initially we've credited the deposit and the installment, and this has been repossessed. So we record at the opposite side to reduce this deposit and installment. Okay, so this is because of repossession. Because of repossession of an amount of 140, and the corresponding entry will go to the credit side of repossession. Is that okay? Because this amount already received is an income to the high vendor. So we open a repossession account. So we have the repossession account. Then we will do the credit entry. All right, so the corresponding entry will be the high purchase debtor, and the amount is 140. Very good. Is this clear? So after passing this entry, we can first of all close these two accounts because we are done with this entry. So to close these two accounts, the total here is 15,140. So 15,140. So the balance CD becomes 3,840. So the balance brought down becomes 3,840. We can equally balance off this account. The credit side is bigger of 15,000. So that we can have the difference to be 14,700. And this 14,700 as the sales balance will be transferred to the high purchase trading. So we represent here by the HP trading or the trading. That is HP trading, okay, account. So we are sending this to the credit side of high purchase trading. So that is high purchase sales So high purchase sales is an amount of 1,000 or 14,700. Very good. So after closing these two accounts, okay, let's try to prepare these two accounts in order to determine the gross profit on the transaction. Now we have high purchase trading account, we have the sales, okay. So we compare the cost with the sales in order to determine the gross profit. So the HP cost of sales from the question is 9,000. But remember that out of this 9,000, the cost of the repossessed goods is 180. Okay, so we need to split it into two so that we take out the repossessed one and the remaining one will represent items that are still under high purchase contract. Okay, and that will give us 8,820. Is that okay? Now we want to determine our gross profit. So the gross profit will be the sales of 14,700 minus the 8,820. Okay, and this will give us 5,880 as the gross profit. But because we are using the provision for unrealized profit method, we need to calculate a provision for unrealized profit on this gross profit. So for provision for unrealized profit, we know the formula to be the high purchase debtors balance. We have the high purchase debtors balance to be 3,840 over the sales, high purchase sales. So the sales balance becomes 14,700. So 14,700 we multiply by the gross profit of 5,880. Is that okay? And this will give us 1,536 as the provision for unrealized profit. So to determine the true gross profit of this transaction, what we do is that we subtract the provision for unrealized profits from the total gross profit. Okay, that is 1,536. Then we will get 4,344 as the true gross profit. So 4,344 as pure gross profit. Is that okay? We have the credit side to be 14,700, debit 14,700. So we are done with the high purchase trading accounts. So the pure gross profit is 4,344. Is that okay? So let's try to determine the gross profit on the repossessed goods. Is that okay? So to do that, we compare the cost against the sales. So we have cost of sales. This is cost of sales with regards to repossession. That is the 180. So we have 180. And remember that the repossessed goods has been reconditioned and sold. So the cost to sell or the cost incurred on the reconditioned item is 10. So cost on recondition, okay. So recondition item, okay, is 10,000 cedis. And this reconditioned item is sold for an amount of 60 cedis. So the sales on the recondition is 60. So to determine the total, we have 200. We have 200. So the gross profit becomes 10 cedis. That is the gross profit on the repossessed goods. So basically, this is how we pass entries with regards to repossession when we are using the provision for unrealized profit method. So the other account that is left is the provision for unrealized profit. So I'll claim the repossession account and then prepare that account as well. You can see that the provision for unrealized profit is at the debit side of the high purchase trading. So when we come here, it will be HP trading at the credit side as 1,536. Is that okay? So that the balance The balance CD will be 1,536. So the total will be same. The total will be same. Because of the board, let me bring it here so that you can see it clearly. 1536. So the total 1536. So that the balance brought down will be 1536 for subsequent years. So we've now ended our lesson on accounting for hire purchases. In our next video, we'll be looking at more of IFRS and IAS topics. Is that okay? Probably we may look at IAS 36, that is impairment of assets. So just subscribe to the channel so that when we begin uploading all those videos, you get notified. So until we meet for our next video, I think it is bye for now.